Welcome to Business Line's State of the Economy podcast, where you'll find insight, analysis, and the story behind the numbers.
Hello all. Welcome to Business Line State of Economy podcast. I am Amiti Sen. After a 3% decline in goods exports in 2022-23 to $437 billion, the new fiscal has started on a positive note with 2 consecutive months of growth. While exports in April 2024 grew around 1% year on year, in May 2024, the growth rate was more robust at 9.1%, with exports touching 38.13 billion. Imports also rose in May, but they increased by a lower 7.7% to $61.91 billion. However, the trade deficit widened to $23.78 billion, which was a 7-month high. What do these May figures indicate? Are the export numbers just a flash in the pan, or do they signal a rebound in growth? What story do the import numbers tell? And is the trade deficit something to worry about? We have with us today Dr. Ajay Sahai, Director General, Federation of Indian Exports Organizations, to explain the story behind the numbers. Dr. Sahai is a noted trade expert who has been dealing with exports and imports for many, many years, assisting both the industry and the government. Dr. Sahai, welcome to the podcast.
Thank you. Thank you, Amiti.
To begin with, could you please tell us if the May numbers were on expected lines and what accounts for the rise in exports?
In fact, I will say that May numbers were on expected line. We were in fact expecting that it may be a low double-digit growth. It is around 9%, so I think it's much on the expected line. I personally feel that world has started living with some of the headwinds. They have already factored the Russia-Ukraine war and even the Hamas-Israel conflict. The Red Sea crisis, of course, is putting a lot of challenges, but not on the top lines of the company, but on the bottom lines of the company. So these are on the expected line, and all the global forecasts are also pointing out a better year for the trade so far as 2024 is concerned. Inflation is also softening up. European Central Bank has already reduced the key rates, and we expect Fed to follow, and then other banks also. So in that perspective, I think it's quite encouraging one, but it's on expected line.
Right. So going by what you're saying, this growth could be sustainable going forward, right? And
Absolutely. I personally feel that we have to add to export, particularly merchandise sector in this year. We, on our own, are looking into a merchandise export in the range of around $500 to $510 billion and services export of $390 to $400 billion. So put together, despite all these headwinds, we are looking into an export of around $900 billion this fiscal.
Okay, so that will actually amount to a substantial growth over the present year.
Yeah, that we are looking into around close to 15% growth in both goods and services exports.
Wow, that is something to look forward to indeed. And on what factors would this export growth most depend on?
No, in fact, the growth, I will say that it's after all the demand which propels the growth. The demand has been pretty good. And now we are seeing a lot of orders flowing. In fact, few months back also, when we did a survey for the exporters, they pointed out around an increase of 10 to 15% in the order value to them. Secondly, I think the China Plus One policy of the global companies is also helping India. The US tariff has also sent a signal to those who are dependent on China that as of now, these are certain tariff line, but then the way US elections are heading for more tariff may seems to be on card. And a lot of buyers are looking for a supplier beyond China. So that is also helping the country. And good thing with this good export number has been that after a pretty long time, we have seen many of the 30 products showing a much improved performance. And in some of the labor intensive sectors, for example, in apparel or handicraft or carpets where we were not doing that, we are showing close to double-digit growth. And what is more important, in all of our 10 top markets, we were positive. And in some of the market, for example, if you're looking into Malaysia, growth rate was around 87%. In Netherlands, it was around close to 45%. In UK, it is around 34%. So this is something which help me in concluding that we are on our export target and we should look towards whatever we have decided to achieve in 2024-25.
Great. That's very optimistic. Optimistic outlook. And I think the numbers in May are supporting
Yeah.
such a
Hey,
outlook. But tell me something. This growth which is happening, is it mostly in traditional markets and products, or is diversification also happening?
no, definitely diversification is happening, but please bear in mind that probably the advanced economies, they have better appetite for imports. So while the diversification is happening, and even in some of the countries, the growth rate has been pretty impressive, but when you are looking into the aggregate value, that may not be looking that much of fine. That I've seen is also visible that all of a sudden we have seen that Netherlands has emerged as our third largest export destination. UK has replaced China also at the fourth position. So these kind of changes are also happening.
Right. So, looking at imports, so in May 2025, 2024, imports increased, but at a slightly lower pace than exports. So, despite that, we see a considerable increase in trade deficit, especially if you look at month-on-month figures. Why is that happening? Is it something that one should worry about?
I think basic reason why, despite the import showing so much of growth, there is widening of trade deficit is the fact that imports are on a very high base as compared to exports. So even if little growth happens, it is accentuating the trade deficit. Secondly, we have seen that with the petroleum prices moving up little, that has also increased our import bill, and so has been the import of some of the precious commodities also. Going forward, I feel that probably the global oil prices remaining at the same level, we may not see that much increase in growth. But I think we are not much worried about the imports, provided the profile of import is something which is required by the domestic industry. So if the import is happening of the capital goods or raw material, we should not having serious concern about that. But if it is of the finished good, then definitely it's a cause of concern for us.
Right. So, the import numbers need to be looked at in more details. That's what you're saying. So, if it
Absolutely.
is
Profile of import is more important than the total
Mhm.
number of import.
Right. So if it is good imports, I mean the imports which is going into making our finished products, then that is
That's
something desirable. That should not be
absolutely.
checked. But
Yeah.
if it is finished products, then we have to see if
Yeah.
where there is a scope for checking it. Okay, so tell me one thing: this Russia's war with Ukraine, it has been going on for more than 2 years now. So has it hurt India's trade interest? So we see that both exports and imports have gone up last fiscal, although exports are still negligible compared to the high oil imports. Is there scope for exports to grow further?
I agree that there is huge scope for export to grow further. We have rolled out the rupee payment mechanism for trading with Russia and many other countries. It has started yielding the result. I entirely agree with you that there has been a huge growth in imports because imports of yeah, oil and import of fertilizer is happening from Russia, but export numbers are also improving. The way the trade is happening, if we are able to successfully exploit the potential rupee payment mechanism, we should be able to take our export to around $10 billion or so to Russia in next 2 years or so.
That will be a huge jump. I think at present it's around $4 to $5 billion,
That's
right?
that's
Okay. We already have the FTAs with UAE and Australia. Australia, it's a limited trade and goods agreement. So we have these two agreements already in place. So
yeah.
looking at the export and import numbers, do you think that these two agreements have started yielding results?
Absolutely, because if you look into India's export to these two destinations as compared to India's overall growth in exports, overall export in 2023-24 was in the negative if I'm talking about the merchandise sector. Whereas with both these two destinations, we have seen the double-digit growth. I was looking into the figure of Australia in last 5 years. My trade to Australia has gone up by more than 125%, which means that compound annual growth rate must have been close to 14 to 15%. So these are absolutely good number. I feel that as the industry is able to exploit the potential offered by the free trade agreement or comprehensive economic partnership agreement, the numbers will go. And I'm pretty sure that in times to come, India will be signing more FTAs with countries, and that will be providing much better market access to exporters.
Yeah, exactly. That was my next question. How optimistic are you about the FTAs with Oman and the UK happening and the kind of results they are expected to deliver?
Oman, I expect to happen very shortly. With UK, of course, the negotiations are on, but it depends which party comes to power in UK, because UK will be going through elections. But I personally feel that with those countries, the FTA should be operational by the end of this month. With UK, there will be a lot of opportunity which will come. And not only in the goods, I'm looking into more opportunity into the services also. And if UK relaxes the immigration law for the Indian professionals, probably we may see huge jump in export of the services to UK. Oman itself is not a big country, so it has a limited appetite for import. But I'm using the FTA with UAE and Oman with the same template. We can extend it to the GCC. So we are hoping that with Oman also signing an FTA, probably we will be moving towards signing a FTA with the entire GCC countries.
Great. So 2024-25 is likely to be a much better year for Indian exports compared to maybe the previous 2 years. So on
Yes.
that note, I will thank you for joining us. Thanks a lot, Dr. Sahai, for explaining things to our listeners in such details. We hope to have you back with us soon.
Thank you, Amiti. Thank you so much.